Okay, good morning students. This is the third ratio what we are learning under liquidity and solvency ratio. Now the third ratio name is proprietary ratio, also called as equity ratio or total asset ratio. We have three names for this: proprietary, equity and total asset ratio. What it shows the relationship between? It shows the relationship between shareholders fund and total assets. Now what shareholder fund comprises of, or what all it includes? Shareholders fund include paid up equity capital, okay, then it includes reserves and surplus, it includes preference share capital, it includes profit and loss, but it should be surplus, that is what credit balance. Credit balance means profit. Clear? What all total assets include? Total assets include fixed assets, investment and current assets. So these are the things which we include in the above formula. Now you have to see that only these things should be included, the rest all should not be included. Clear? This is just a problem to be solved on proprietary ratio. Now the proprietary ratio tells all about what? Okay, now it tells about shareholders fund divided by total assets. Any given information should be, okay, segregated into shareholders fund and it should be segregated into assets. Clear? So equity share capital, where it goes? It goes into shareholders fund. Preference share capital, yes, it goes into preference share capital, it goes into what? Shareholders fund. Reserves also goes. Debentures should not be included. Okay, then next one, creditors should not be included. Fixed assets, yes, fixed assets should be included in what? Assets, that is what? Total assets. The next one is what? Current assets should be included, investment should be included. So what is the formula for proprietary ratio? Shareholders fund divided by total assets. Shareholders fund, what all we have considered it to be included? Equity, preference and reserves. When we total it up, it will come down to 5,25,000. And then total assets includes what? Fixed, investment and current assets. So when we total it up, it will come down to 7,32,000. So that is what? 5,25,000 divided by 7,32,000. So it will be 0.72:1. So proprietary ratio comes to this much. Okay. Now what is the standard of proprietary ratio? How much it should be? It should be 5:1. Means what? When shareholders should be 5 rupees, total assets can be 1 rupees. It should not be less than that. Okay. So this is what? Shareholders fund should be more, okay, compared to your total assets. What does the standard ratio tells all about? Clear? The next ratio what we are going through is debt equity ratio. Debt equity ratio tells the relationship between external equities and internal equities. External equities include long-term liabilities as well as it includes shareholders fund. Now what all external equities include? All debts like creditors, bills payable, debentures, outstanding expenses goes on. So these are what? Clubbed under external equities. Internal equities include what all things? Which are, it is same as shareholders fund. Internal equities includes, it is same as what? Shareholders fund. So it includes what? Equity share capital, preference, okay, then reserves and surplus, reserve fund, shares, premium and sinking fund. This is very important. Okay, in shareholders fund also it includes, okay, surplus, share, premium, sinking fund, all it includes, okay, in your shareholders fund, in your previous ratio also. What is the standard of debt equity ratio? Debt equity should be what? 2:1. Means what? Long term liability should be 2, so my internal, okay, equity should be what now? 1. So that is what? Standard debt equity ratio. So how to find out shareholders fund? How to find out shareholders fund? Very important. Total assets minus total liabilities. We have to minus it from total assets, whatever they give, we have to minus what? Total liabilities. In next class or in next video, we are going to check with the problem. Please write down this notes for the today's class. Thank you.